Welcome to FinLoop. Okay, so today we are diving deep into one of the most talked about contenders in the global supply chain race, Vietnam. For years, right, companies have been searching for the next China. And you know what? A lot of them think they've found the answer in this Southeast Asian nation. But is all that hype really justified? Let's dig in and see.
You see, for decades, the world's factory floor had, well, pretty much one address. But now, rising geopolitical tensions are forcing this massive rethink. Companies are just not comfortable anymore putting all their manufacturing eggs in one basket.
And this isn't just about finding a single backup plan. No, it's about building a really complex, resilient network of manufacturing hubs all over the world. That old China plus one strategy? It's quickly evolving into a more sophisticated China plus many world where you spread the risk across a whole bunch of different countries.
So here's how we're going to break this all down. We'll start with this great rewiring, then zoom in on Vietnam as a top contender. After that, we'll weigh the bull case against the bear case, and finally, get to the investor's bottom line.
All right, first up, let's really get into this massive shift that's setting the stage for everything we're talking about today. What's actually driving this great rewiring?
Look, this is way more than just a trend. It's a fundamental strategic pivot. As that friction between the US and China keeps disrupting the old way of doing things, businesses are, frankly, desperate for some stability. And that has thrown the door wide open for emerging economies to compete for a piece of that global manufacturing pie.
And that brings us, of course, to Vietnam. This is a country that has aggressively and very smartly positioned itself to be a prime beneficiary of this whole shift. As companies look to diversify away from China, a whole lot of them are turning their attention right here.
And you can see why. On the surface, Vietnam presents a really compelling package. I mean, you've got an economy that's built for exports, it skillfully juggles its relationships with both the US and China, it has this massive young workforce, and its labor costs, super competitive. It kind of seems to check all the right boxes, doesn't it?
So what is the bull case for Vietnam? Why are so many companies making these huge bets on its future? Let's take a look at the actual data behind its core strengths. First off, it is an absolute trade powerhouse. Vietnam's entire economic model is built around exports, and they've hardwired that focus right into their foreign policy. With massive trade deals like the RCEP and the CPTPP, it basically offers companies a launchpad with special access to markets all over the globe.
And then there's this, the demographic dividend. A staggering 70% of Vietnam's population is working age. Think about that. That's a young, huge, and cost-competitive workforce. It's a massive draw for manufacturing, especially when you compare it to some of its aging neighbors.
But it's not all smooth sailing. And to get a really clear picture for any investment, you have to look at the pretty significant headwinds Vietnam is facing. That shiny surface, it hides some very real challenges. And here's a core vulnerability. You see, while Vietnam is sold as an alternative to China, its manufacturing sector is deeply, deeply tied to it. With more than a quarter of its intermediate goods coming from China, it's not really insulated from trade tensions at all. It could easily get caught right in the tariff crossfire.
And what about that huge workforce we just talked about? Well, while it's definitely cost-effective, its productivity really lags behind its key competitors. Just look at the value added per worker here. You can see how that gap could create production bottlenecks and, maybe even hurt quality control, potentially wiping out the benefit of those cheaper wages.
And on top of that, there are other serious issues. Even though they're spending a lot on infrastructure, the quality of their roads and energy grids still isn't quite there. Recent high-level corruption scandals have really shaken its reputation for political stability. And there are these growing questions about whether it can actually move up the value chain, since its manufacturing base is becoming less complex, not more.
So when you lay it all out, side by side, you see this picture of really high potential that's matched with equally high risk. On one side, you have these powerful tailwinds of demographics and trade access. But on the other, you've got these major headwinds of dependency, low productivity, and infrastructure gaps.
So what does this all mean for businesses and investors? Is Vietnam a green light or a red flag? Well, the reality is, it's probably more like a blinking yellow light, one that requires a very, very deliberate approach.
At the end of the day, success in Vietnam isn't about just showing up and setting up shop. It demands a proactive strategy. Companies have to actively diversify their own supply chains away from China. They need to invest directly in things like training and logistics to close those productivity gaps. and they have to keep a very close eye on a political situation that's become far less predictable.
Which, of course, leaves us with the ultimate question. The opportunity? It's clearly there. The ambition? Absolutely undeniable. But the path to becoming a true supply chain superstar is filled with these internal obstacles. And whether Vietnam can overcome them, well, that's what's going to determine its future, and maybe the future of the entire global supply chain itself. Subscribe to FinLoop for more short-form insights on finance, investing, and global markets.